Hello, amazing traders. Welcome once again to my channel. In today's video, we'll be talking about demand and supply, when to apply it, how to apply it, and why you should stick to demand and supply. It's very importantly when you're trading. This is my account on Funded Next, as you can see, and I got this account on the 25th of September, just barely 2 days ago, and we're already $427 plus. I made this money simply by trading demand and supply, and in this video, I'm going to show you step by step how you can also patiently wait for demand and supply setups. I'm so sorry for not putting out videos. It's been some days. You already know on this channel, I make original content, decent content, non-copied content, and the details are always raw. Most times I don't even edit. I don't even have time to put clips together just because I just give out the contents as it is. I've been in trading for a while now, so I have some very good experience to share with you. So do not skip this video, sit tight, and then let's enjoy. Also, I would love you to. I opened a community. You can see here is the link. I will drop the link in the description. This community is for traders. I'm looking at making a community of genuine real traders where we trade and with no hypes. We just trade, follow the market structures, trade what we see, manage our risks accordingly, and then grow together. So I created this community. The link is going to be in the description of this video. And here is my Instagram page as well. I'm also new on Instagram. Do follow me up on Instagram. The link will be in the description of this video. I am very much active on Twitter, guys. I am very much active on Twitter. I'm going to drop the link on my Twitter right in the description of this video. So do well to click on that. Okay, so here's my Twitter account. So I'm going to drop the link in the description of the video. Do well to follow me on Twitter, follow me on Instagram, and then follow me as well on in the Telegram community. Okay, so that being said, let's get back into the video. So supply and demand. Now, demand levels are levels where there's lots of buying interest. Let me get to the chart so I can explain this quite clearly. So demand levels are levels on the chart where there is a lot of buying interest. That means buyers are interested at that price. Institutions, let's use the word institutions because they are the ones moving the market. So once we spot institutional intent, buying intent at a particular level, we draw at that level and then wait for price to come back to that level so we can now buy at a discount. Now, supply is the flip of demand. Supply is at those levels where the institutions are looking to sell. And there are lots of orders waiting in those zones to be executed to sell down the market. So what we do is when price gets to the supply zone, we wait to validate that that supply zone will actually hold. In other words, we wait to validate that the institutions still have orders resting on those zones that they want to trigger. So once we get that confirmation, we sell along with institutions. Remember, for this strategy to work, you have to trade along with the trend. You have to, and who creates the trend? The institutions create the trend. So when I say trade along with the trend, I mean trade along with the institutions. Now, trade along with the trend, do not at any point try to oppose the trend. Now, once the order flow gets disrupted, that means that the trade is invalidated. If you're looking to buy and then suddenly a demand level has been invalidated, that means we're no more looking to buy. That means the order flow, the buying order flow has been, bullish order flow has been invalidated. The same thing for sales. If the sales zone, the supply gets invalidated, then we'll now have to change our buyers. That is why I said earlier, wait for confirmations. Okay. So now on this chart, as you can see, let's quickly mark out our demand levels. Now for us to really consider demand levels, we want to see Marabuzu kind of candles get off those demand levels. We want to see great candle like a bullish surge out of that level, full-fledged surge, candles, leaving imbalances in that movement. So that way, we know that price will definitely have to come back to fill those imbalances. And when price comes back to fill those imbalances, we're now getting a discount. Take a look at this level, guys. You can see this candle price market was selling. Meanwhile, this is 1 day time interval. Normally, I use 1 day, 4 hours, and maybe 1 hour at times to spot my demand zones. Why do I do this? Because the higher the time frames, the stronger the levels. So this is 1 day. So let's work with 1 day for now. 1 day, you can see the market was selling. It took almost the whole day to sell to bring price all the way down here, and then suddenly we had this push to the upside. So that means that there is demand for US states. It is a commodity with the in this index we're trading. US states is an index. So you see, price was coming down at this point and then pushed up to engulf this candle. So this alone shows that the market has changed from bearish to bullish because this is an engulf candle, and we already know what engulf candle means. If you don't know, then I will comment in the description. I might have to make a video on candlestick formations and candlestick pattern. But I believe every trader should know what an engulf candle means. So since this bullish candle engulfed the bearish candle, we're now looking to buy. Now, this is going to be our demand. The whole of this candle will be our demand, and we'll be looking to buy price if price ever comes back to that level. Now, note sometimes price might not come back to your demand, sometimes it might come back. So this is going to be our area of interest. Okay, everything in this box is going to be our area of interest. So normally you'll see traders do something like this on social media, YouTube, and all of that. So this is going to be their entry, and this is going to be where their stop loss will be. Now, why do we have a stop loss? So you can see this bullish takeoff. This is the level which institutions are interested in. If price ever goes below this level, that means this demand is no more is invalidated. So we could just have our stops here just to be sure, because sometimes we can have a little kind of wick and then we reverse. So this is Very, very ideal. And then we target 1:3. Normally I target 1:3, and that is exactly how I was able to make this money, which you see on my account. Just 2 days of trading, guys. You can see right here on my account. Just 2 days of trading. I just took a trade, two trades, and then that was it for that. Back to the chart. This is a demand zone. As you can see clearly, price didn't come back to that demand level. Now let's look at this level. You can see price was selling, 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 and then suddenly we had this full-fledged candle that engulfed this particular candle. Once again, just like I said earlier, once we have the full-fledged candle, what do? We have to wait for the discount level of the candle so we can buy. So you see this candle now, we have to wait for discounts of that candle. So you can see this is where the discount of the candle is, and then we now position ourselves to buy. Remember, for a zone to be valid, for us to call a particular zone a valid demand zone, it must have a bullish, a Marabuzu kind of candle erupt out of that level. So with that Marabuzu kind of candle erupting from that level, we are now convinced that institutions are interested in taking price off that level. So we want price to come back to that level, 50%, 60%, 70% retracement kind of fifth retracement kind of thing, so we can buy back price at that level. You can see clearly. So we spotted our demand right here. So we didn't rush to buy in. Instead, we waited for this retracement into the discount level. This is discount level. This is the premium level. Guys, I don't want to make this video too long, so I'm really trying to round up. So that is our first demand, which we spotted. This is another demand right here. You can see we were taking price down, and then suddenly we had this good Marabuzu full-fledged bullish candle. So what do? You don't have to wait for price to come back to this level, because if you put our tool right here, you can clearly see the discount and the premium. This is the premium, this is discount. So anything in this level, we are willing to buy. Now the second rule is this candle must give us an imbalance or a fair value gap. So, and that's another confluence we add up to the strategy to make it work, very effectively. And you can see this candle took off, and you can see the fair value gap well highlighted on my screen. So all we want is price to retrace back into that fair value gap, to cover those imbalances, to cover the leftover orders, and then give us that movement. Now that is the second trade. Now on the third trade, you can see right here again, we're selling, selling, selling. And then suddenly we had this Maruzu candle, this full-fledged candle take off. What does this mean? Institutions still want to keep price going up. They don't want price below this level. So what that means for us is we wait for the discount of this candle. We want to buy in the discount level of this candle, which is powered by the institutions. And then you can see clearly where the price came back to the discount. So we'll put our entries here. Our stop loss will be somewhere below that institution candle. And so we keep going and keep going and keep going. So you can spot demand and supply. You can always spot them here at demand level, and our stop loss will be just below the institutional candles. Now for next week, same thing. If the institutions are still interested in taking price higher, so this will be where our demand will be, and then we wait for 50% of these movements, and then our stop loss will be just right here. Now anything that makes price straight below these levels, is where we saw institutional buying, that means institutions are no longer interested in buying at those levels. So demand is levels where there's buying pressure, supply is levels where there's selling pressure. So remember also, as one of the rules for this strategy to work, price must be in a kind of a trending market, and we have to follow the trend. In this case, you can see market has been trading to the upside. So that is why we look for demand levels to sell, to buy into rather. If market were to be in a selling structure like this, we'll now be looking for supply levels, as you can see here, to sell into, supply levels to sell into, supply levels to sell into, and then keep selling the market until market change formation, which you can see here now flip to buying. Then we start looking for demand levels. So this is simply what you need to understand for demand and supply. I was able to show you for demand in my next video. I might explicitly show you or discuss more about supply. Please leave a like on this video, go to my other videos, watch them as well, leave a like, share, and continue to educate yourself. I'm happy I'm able to create this content for you. If you have any content specific in mind, feel free to let me know in the description. I'll be happy to also assist. Remember to follow me on all the social media links which I already sent earlier. And if you don't have a Funded Next account, very, very important, I'll leave the link to a Funded Next account. There are so many nice offers Funded Next is giving out. Go check out some of those offers, sign up to Funded Next, and I will see you guys in the next video. Bye for now.